What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol ALT for Altimmune Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. This, of course, will be an update since we covered it quite literally yesterday, and my goodness, what an absolute change in tone before the bell this morning. We were looking at this yesterday around the same time as the release of this video, looking at a potential for gap up. Obviously, it gapped way down here towards that 1065 and made a very impressive recovery throughout the day up towards this 15 area in here. So let's first remind you that the framework that we discussed on yesterday's video applies to a gap in any direction. So what I want to do is remove these from the chart, right, and take a look at the extended hour session and remind you how we play gaps, right? So if we come down here, what you'll remember and how we always, this doesn't change. It doesn't change depending on the stock, depending on the price, nothing, right? Here's the overnight low. Here's the opening print. What do we say about gap downs, right? The potential is always for a gap and trap. That's always what you think about first. So if we opened here, failed to take out the overnight low, traded back up through the open, you were looking for longs. Now, don't get me wrong. We weren't expecting a move all the way up to 15, but you definitely could have taken advantage of maybe a long from the open up to maybe, I don't know, 1250. Even if you didn't get the entire move, right? That's still a very substantial trade on a stock trading sub 12 at that point in time from earlier this morning. So just to illustrate, right, that the framework truly does work. It's going to give you very good risk reward. That's something that you should always consider. In terms of what we need to watch out for here as we move into the future, right now, essentially that the structure of the chart has changed, let's take a look at this through the lens of Fibonacci and just see how the move actually unfolded and whether or not it was healthy, right? So coming down from the lows all the way up to the high of the first move, obviously this red candle here did pull back quite considerably, even violating the 61.8, but as we know, if we can recapture many of those levels in the next candle, then that's going to negate that. Obviously, you're going to go with the candle that is, right here, smack in the future. But obviously, this would have changed if we started getting candle closes underneath. Eventually, you expect that 100% retracement, and it didn't happen, right? On that very next candle, we actually took back the 38.2, went for that second run. So let's go ahead with our fibs from the low all the way on up to the high this time, essentially, and look at where our 38.2 is from this perspective. This is the must-hold number now that we've essentially done so much work, recovered so much after this gap down. So let's remove the fibs and talk about some scenarios. So ideal consolidation happens here, looking for the breakout up and over today's high, and probably just, I would really argue, again, probably more conservative actually, wait for a break up and over 1564 at this point in time, and it's probably going to take some time to digest this move right here. This is not something that's likely going to happen on tomorrow's session or even the session after that. Now, if it does happen, fantastic, right? But if it doesn't, just be mindful, right, that this could consolidate as a doji, it could consolidate as a hammer candle up here, it could be a red-bodied candle, but as long as we're still above this 1340 and below this 1564, fine. You're looking for healthy consolidation here, put in some sort of daily bull pennant, bull flag, whatever it ends up being, taking the break for higher, and for something like this, right? As we know, to get back up towards 17, this target in here, and then after that, we have 1814. So incredible recovery from today's session, but now it's just a question of can we get some healthy digestion and not violate that 1340. If we do, I would imagine we likely fall back down towards this area in here, noting that there was a period of consolidation and price acceptance. Let's try that again with a different tool here this time, right around this area. So I would imagine it comes back down towards 12 and 1130, right, to come back and revisit this area. That might look something like this, and you're not actually shorting that move. You're just kind of being patient, waiting to see how that unfolds, given the backdrop of today's move. So if you enjoyed the content today, if you enjoyed the update on this stock and sort of walking through that pre-market gap session that we sort of did there, let me know down below in the comment section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.